On your screen is the journal entry we talked about yesterday. This is a little more detailed entry for salaries, the payroll entry that this particular company, Mid-Ohio Farmers Market, makes every month. So this entry was dated March 31. Salary expense debited by $10,000. That would be the gross pay that the employees earned. And then we have various deductions. All of these credits over here on these lines are liabilities. We owe money. And remember, this liability or these liabilities work a little differently than the ones in the past. We don't get an asset in exchange for these liabilities, but in accounting terminology, they still are payable and they are called liabilities. So we deduct this money from employees, from the money they earned. So in effect, these amounts are not our money any longer. They belong to the employees. We will pay those taxes, federal, state, FICA, city, all those taxes for them. And again, the law requires us to do that. So those are all credited because liabilities increase on the credit side. Cash is credited, cash decreases because this is the net pay that we paid to them, $65.70. Now, our next step in our accounting cycle is to go from the journal to the ledger, and at the bottom you see our tabs. You should be familiar with how this works. That would show you the various types of ledger accounts. I want to look at these though. Let's look at the asset accounts. Now, obviously, there would be many transactions, many journal entries, many postings during January, February, and now March, but we're showing just the ones that are relevant to this particular entry. Now, as I said before, this company pays its employees every month. So, in cash, along with all the other entries, the debits and credits to cash during the year, we would have these entries. On January 31st, we would have paid a payroll, and the net pay, similar to what you saw in the journal, would have been $65.70. We will assume it's the same. Employees earn the same amount of money every month. So that was in January, and that would have been posted from journal page 8. In February, at the end of that month, we had another payroll, and again, that reflects back to the entry, in this case, from journal page 12, and again, the same credit to cash. Okay? Liabilities will be something similar. Accounts payable we're not using in this particular problem, so we're not going to worry about that. But down here, under federal income tax payable, once again, the same thing happens. We had a payroll in January, we had another one in February, and those journal entries would have been from journal page 8, journal page 12, and $1,000 credit each time. And that would have been the same each month. Same thing happens with the state income tax payable. You see those two dates at the end of January and February, and again, two credits of $700 each time. FICA, the same way. At the end of each month, there's a credit of, in this case, $1,530. Over in city income tax, nothing different here as well. Two credits, in this case, $200 each. So we want to get a sense of how this affects those particular accounts. We have owner's equity. We're not dealing with that in this problem. This particular company has a net value at the end of February of $25,861. That doesn't concern us right now. Our payroll entries do not directly affect owner's equity. We'll see how all that is going to work later on. Revenue. Let me see if I can go to revenue. There we go. Sales has nothing in it. In the same way with expenses. There are 4 expense accounts, and you see nothing there. As I mentioned in the last topic, these accounts are a little different because they are closed. We haven't talked about that term, that accounting term called closed. We close those accounts. In other words, each month, the sales, any revenue account begins with a zero balance. any expense account each month begins with a zero balance. So that's why we're not showing anything there. Okay, let's quickly go back and see how we post this, and hopefully that sounds like a familiar task to you. First of all, salary expense. And again, this happens every month. At the end of the month, the employees earned a gross pay of $10,000, salary expense debited by $10,000. We go to salary expenses way over here and put in the date. And the debit is $10,000. And the reference here is journal, page 23. If you notice, our journal page now is page 23. So that's in there. And again, later on, this will be reduced to a zero balance, but we're not concerned about how to do that and why that happens just yet. We'll talk about that much later in the course. So we've posted it to salaries expense, and that account number is 504. We go back to the journal. In the reference column, we put 504. And in each of these now, federal income tax payable, each of these will be credited. So we post to those accounts. These are liability accounts. So we go there. First of all, federal income tax payable. Comes from journal page 23, and it's a credit of $1,000. So we're doing the same payroll entry each month, so it should look the same, and it does. And this account number is 202. Back in the journal, in the reference column, 202. State income tax payable, $700. Again, a liability. We go to state income tax payable at the end of March. From journal page 23, and that's a credit, as we said, $700. And this number is 203, back into the journal, 203. So really a very simple process. $1,530 is credited to FICA. Remember, FICA is a federal tax that encompasses both Social Security and Medicare. And there's a complicated process of determining how much that amount will be, but we're not worried about that right now. And we will assume the amount each month is $1,530. The account number 204. Back into our journal. City income tax payable, $200. Once again, a liability account at the end of March. From journal page 23, 200. That account number is 205. And back in the journal, 205. So that takes care of our liability accounts. And the last thing is the net pay, the take-home pay that we actually pay to the employees. And so that reduces our cash. Cash is an asset. So the credit of $65.70 has to go on the decreased side of cash, which is a credit. So we go to assets now, 3118, journal page 23, and the credit of $65.70, and the account 101 goes back into the journal. Okay, very simple posting process. You should know how to post by this time, so it's not a difficult process to post, but it's important to understand a couple things. One is these are all deductions from employees. It's really their money, and we're holding it, and eventually we're going to pay it. And we do pay at this time on March 31st, $65.70, because that's their net pay. So cash goes down by that amount. Now, one point I want to make in all of these accounts, not the assets necessarily, but the liabilities. Typically, taxes are paid quarterly. So at the end of March, this is the end of the first quarter of the year. So if I'm the accountant for this business and I look in federal income tax payable, this tells me I've got 3 credits. And the balance obviously is $3,000. So each month I have kept out from the employees $1,000, each time from their money that they earned, and now I have to pay it for them. And there's a process again for this as well, and the government's going to let me know, but I better have the $3,000 tucked away here in this account so I can pay it. And we'll show you how that works a little later as well. So I have to pay federal income tax. Typically state as well comes on a quarterly basis. So I look here, I have 3 credits of $700. That's the increase side. So I have a total of $2,100 that I owe to the state of Ohio in our case on behalf of these employees. FICA, same way. I've got these 3 credits. The total has to be paid to the government at some point, and if it's a quarterly payment, now's the time I have to do that. The city may be different, maybe quarterly as well. If so, I've got $600 that I have to pay to the city. So all of these accounts encompass money that we now owe. It's really not our money, it's the employee's money, but we still have it, so we better pay it. So we have to keep track of all of that, an important process. So we will now go back to your course page. There are just a couple questions I want you to answer, and then our next assignment probably tomorrow will be for you to actually do this posting yourself on another example.